Good morning all and welcome to today's video. So today I have just the one pair on watch and that is Euro Kiwi. The market looks like it's just messing around once again. So rather than try and chase trades and setups which are not actually there, at least not according to what I'll be looking for, then I'm just going to move on to what does look like it's shaping up at this moment in time, and that is Euro Kiwi. So I'm just going to I'm just going to show you Euro Pound in a second, um, just for the purposes of proving once again that it's not about, you don't have to be right to make money in trading. You don't have to know what's going to happen next. What you do need to know is what you're going to do, what you're going to do next. Okay, so a prime example of that is Euro Pound. If I just touch on that. Where is it? There it is. Right. Euro pound. Let's just go straight down to the entry. If you were watching my video yesterday, you will have noticed that I was looking for, if you remember, and I explained why I was looking for it. I was looking for price to tap into this area because we were down in this region here. Where were we? We were down sort of here. I was looking for this kind of impulse correction continuation to take us up to this area, potentially tap above, and it was looking promising here. This is exactly what I was anticipating, that we'd break above here and then potentially break down, wash out all the stop loss and the limit orders here, push down and then get a flag like this, and then I would have got short either on the break or within. Okay, that would have implied that we'd taken out the liquidity there, and then we could potentially be looking for that trade all the way down to here as a first solid target. Okay, now what did price do instead? Okay, when we broke above, I think I set an alert underneath to see if we could break back below. Price did break below. It kind of wicked below, pushed back up again. Then we wicked below again, pushed back up again. Now, what this is telling me is that it's telling me that price potentially didn't find enough liquidity here. Of course, there could be orders going in this area at the same time, but this is already telling me when we wick below here, wick back up, and then particularly when we break below again and break back up, this is telling me price did not find enough liquidity up here to send it to the downside for that potential flag to form. And if we just analyze this on the 15-minute chart, if you look at this price action, okay, I mentioned yesterday that I pattern separate, so I go through structures and patterns dating back to 2000 on about 2004 on pairs which I trade, and lots of pairs I'm pattern separating on lots of pairs at the moment that I don't even trade, just to cement these patterns that we look for in my mind. And I can't recall seeing price break above a structure like this, do something like this, and then break below and give us a flag that has played out to the downside. That doesn't mean there hasn't been any, but what it does mean, if I've been pattern separating for a long time and I can't recall a single example of price breaking above an area of value, doing this and then breaking to the downside and then playing out to the downside, that tells me that this pattern is not common. It's very, very uncommon for price to do this if it's going to push to the downside. So therefore, if we're trading probabilistically and we're trading things which are repeatable and which have played out consistently, then I'm obviously not going to be looking to get short within after price action, which is not something which has repeated itself typically, or which I've seen repeat itself typically. So what does that mean? Does that mean my forecast was wrong? Does it mean my higher time frame direction is wrong? And what I said to you about price tapping down to here is wrong? Not necessarily, because what price could be doing now, okay, is it could be, notice we have a little hook point sat up here, okay, what price could be doing, but I'm not going to chase it. This is the point about not needing to be right or wrong. What price could be doing, just as an example, it could be giving us something like this, for example, pushing up to here to tap into this hook point. There was a sharp move up followed by a sharp move down, and then we would have this kind of structure. This is just a possibility. We would have this 1, 2, 3, which taps into that sharp hook point, which just so happens to be retesting the back end of this, okay, for that move to the downside. And would that be realistic? Well, yeah, because if you look at this move down here, we had lots and lots of fairly tight corrections. Price needs to breathe. The market needs to breathe sometimes before the next leg lower. And when we've had lots of tight corrections and not many sort of larger corrections like this, okay, sorry for the drawing, when it's just been a series of very, very tight corrections, it's not uncommon for pairs, particularly pairs like euro pound, to correct for longer because the market needs to breathe before the next leg lower. What do I think that'll happen? I have no idea, right? But that is a possibility. So rather than try and guess what the market is going to do after what it did yesterday, I'm just going to let the market show its hand. And that's one of the reasons that traders are not profitable. It's not that they don't know or they're not technically skilled, it's that they're not mentally skilled. And when the market does something other than what they were anticipating, okay, they don't know how to sit out. They just get involved anyway, blow their capital, and then wonder why they're not successful, and then blame the strategy, and then move on to another strategy. Okay, so I'm just going to leave it. Okay, I'm not going to try and guess what the market is doing. It did not find enough liquidity at this area. I'm not sure at this moment in time what it's forming, so I'm just going to let it show its hand. So that is euro pound, and that is just thought that would be useful to one or two of you who think, if you're new to trading, that you have to be right. You don't have to be right, and what a surprise that the women, in my experience, I don't normally champion women specifically, but the women that trade that I've seen learning to trade tend to do very well, and it's probably because they're not fixated on being right all the time, which, as a man myself, I can say with confidence tends to be a male disease, needing to be right. You do not need to be right. And maybe that explains why women tend to do very well at this, because they're not fixated with trying to be right. They're generally fixated with learning and actually trying to just do what they're taught to do very, very well. A lesson for us all, I think. Anyway, I digress. So Euro Kiwi, we have the higher time frame narrative. Why I'm looking at this, and this is a prime example of the complete opposite of what I just showed you on Euro Pound, and I'll touch on that when we get to the lower time frames. We have this area of liquidity here. Okay, price taps into it by way of a 1, 2, 3 touch structure. We know that these structures have usually quite parallel. We have that 1, 2, 3 middle section, and then we tap into here. We wick above, we wick through and not to it. Big difference. And then price moves to the downside aggressively. So I'm seeing this as a complete piece of structure. Price at this moment in time, notice I say at this moment in time, does not need to come all the way up to here because it's already done so. Price then leaves us with a footprint. Price leaves us with a footprint here. We come down. We have all this this is non-progressive price action. When we see corrective price action this wide relative to the move down which has preceded it, there is a very strong likelihood that if we tap into this area, we're headed to the downside. We did tap into that area and we did head to the downside. It's not typically common for price to pull up this sharply if it's going to move to the downside and keep going. So that gives me, there is a slight chance that price could push up to here, give us something like that before going, and then we would have that 1, 2, 3 touch structure again, and then this would just become a middle section. Okay, so that is a factor in my thinking, particularly when we've just rejected potentially off this low here. However, if we just zoom left again, what business does price have coming all the way back up here? It's already tapped into this area. The buyers have already gotten out of their positions up here. The sellers have already stepped in. So and even if you were to look at that high there, we've already tapped into that as well. So price doesn't necessarily need to come all the way back up to here because it's already washed out the liquidity that was sat there. However, I am mindful of that low, but I'm just seeing that as a profit taking area for people who caught this move, and potentially this just being the consolidation for the next leg lower to potentially take us into here and potentially push a lot lower. And one of the reasons is if we just zoom out to the monthly, you can kind of see that there, but what we have here, we have a near miss here to this low here. Okay, it's not really that visible. You can just see it as the wick of a candle, but you can see that clearly visible on the monthly, giving me a clue that we may be headed a bit lower to potentially take out that low and potentially take out this low, which we near missed to last time around. But we can use confirmation to mitigate the chances of us taking an unnecessary loss even if that was to occur. Okay, so could this be the start of a morning star? It could be the start of a morning star to push up back to these highs. We shall see. But as we drill down, what you can also see is that we have this impulse correction potential continuation. Price has consolidated sideways for a long period of time, okay? So just looking at that as an impulse correction continuation, price left a bit of a footprint here. As I drill down, you can see this looks clearer on the 1 hour. Okay, so this is where pattern separating comes in, okay? So we've kind of got this structure here. This is too far away now, but we have this kind of, we have this high here, price leaves a footprint. We come down, we tap into that, we move to the downside. That is a completed pattern, okay? We washed out the liquidity, we tap through it. We then have this expanding pattern. We leave another footprint. Price gives us that kind of middle section. We push up, take out the liquidity that was there, push to the downside, okay? So that is a completed piece of structure. So because it's called pattern separation, I'm separating the structures. So if that's one piece of its own, then this is a separate piece of its own. This sharp hook point there, we sell off, we come back up, we near miss to it, okay? Giving me a clue that potentially the liquidity is still sat there and orders are still being placed there because we didn't tap into it. What happens then? We then near miss this area. So we near miss this area and we near miss that area. We near miss here, we near miss that area again. And these tight flags, just to touch on it, when we get a tight flag just below an area of value, particularly when it's a 1, 2, 3, where the impulses are of similar length, that's a very good clue that this is just people getting out of their positions, and then the price will drop back in. And that's often where we see that kind of inverse, that mini inverse head and shoulders pattern, okay? We normally see tighter flags. We don't normally see, if an area of value is an area of value, we don't normally see larger corrections just below the area of value. So this correction here is also a good sign as well. So just removing all of that on the chart, off of the chart. So what I'll be looking for today, this will be a slightly shorter video just because I have the one and only the one pair on watch. What I'll be looking for is price to tap into. Notice the difference between this. Look at what price is doing here above this area of value versus what it did on euro pound, okay? Euro pound was just a lot of this, break back below, break above, break back below. It was doing all this kind of stuff, whereas euro kiwi is just sitting there, it's stalling. Look at the candles, generally speaking, getting smaller. Not every single one, but we have a big candle, smaller candle, slightly larger candle there, but then a very small candle and an even smaller candle at this moment in time, giving me a clue that perhaps price is stalling in this area because it's collecting the liquidity that was sat above here for that push down in the flag. And if we get that push down in the flag, then I'll be looking to get short either with it on the break of the flag or within it. And notice we also have a near miss here to here, giving me a clue that this low failed to take out the liquidity that was sat there. So even if this was to push down and form something more complex, it would probably need to take out this low here that it near missed to before pushing all the way back up to here to potentially tap into this area if that was to happen. And I would be able to manage the trade down to that low, even if that was to happen. But then the higher time frame target would likely kick in. So if we break back below that hook point that I just showed you on the 1 hour chart and this low here, then it would be like, then obviously this is probably not an area of reversal. This is probably just a profit taking area for that next move to the downside to potentially take out this low and potentially go a lot lower. That is my thought process. I hope you've enjoyed this video. Trading is not about being right, folks, as I've said. And as I said, I've had people message me and say, oh, you made me money or you lost me money and all that, and from watching my videos. But interestingly, they say that after I've made a video and after my entry criteria wasn't met. So if my entry criteria wasn't met, how are you thanking me or berating me for losing you money because whatever you traded wasn't what I was looking for? Okay, so that to me that doesn't even make sense. And what that probably is a prime example of confirmation bias, where people watch videos, they ignore the bit where I say don't treat it as a signal service. They look at it and go, oh, he said it's going short. Well, I didn't say it's going short. I said if the market does this, then I'll be getting short. And what people do when they have confirmation bias and when they want to get rich quick is they listen to the bits that they want to hear. You see this with politics all the time, and they ignore the bits that they don't want to hear. So they'll say, "Oh, he said it's get." They'll say he said it's getting short. He said the market's going short. They'll ignore the bit where they're supposed to, if they're using this as a signal service, which I've just said not to do. So they've ignored that bit as well. They'll ignore the bit where I said I'm looking for this as confirmation that the market's going to push lower, and they'll just get short anyway. Okay. So that is confirmation bias. That is gambling. Okay. So that's why you shouldn't be trading a strategy which you don't understand, because you don't, if you're doing that, you've either don't understand or you're ignoring the entry criteria that strategy relies upon, which means that you're not even trading the same as the person that you're, learning from. Okay, so just a little mini lesson there. But anyway, I hope you've enjoyed this video, folks. I will likely be back with another video tomorrow if I have a pair or pairs on watch. Have a great day, and I will speak to you again soon. Thanks for watching.